Welcome back, everyone, to the Gold Talk Show, right here on YouTube. This is where we try and make sense of everything happening in the gold market for you.
And today, it's one of our favorite segments, the deep dive.
Exactly. You, our listener, sent in some really interesting sources asking basically what on earth is going on with gold prices lately, all the ups and downs, and maybe more importantly, what's next?
hmm So this deep dive is specifically for you to help unpack that.
Our mission today is pretty clear. Figure out this recent volatility, the wild swings, and see what the experts think is coming, both short term and further down the road.
Yeah, we've got a mix of stuff, price updates, forecasts, economic trends. Yeah. Trying to get you that full picture.
Because if you've been watching gold, you've definitely seen it doing, well, a bit of a dance. One of the YouTube videos you actually share was titled Vang Namua Trin Ein, Gold Dancing on the Peak. Pretty fitting, wouldn't you say?
Very fitting. So let's jump into these sources and see if we can understand this lively dance and what it might mean.
Okay, where should we start? Maybe with the recent price action.
Sounds good. Let's look at April 27th, 2025. One article from Lao Dong gave a snapshot of the Vietnamese market that morning. SJC gold mean the bars.
Right. What were they seeing?
Increases. Saigon SJC, DOJI, Bao Tim Men Chao, Fuquay. They were all showing prices up between, say, 500,000 and a million VND per loom.
Okay, but what about the spread? The difference between buying and selling? I heard that was pretty wide.
Oh, absolutely. That's a key point. The spread was hovering around 2 to 2.5 million VND per loom.
Wow. That makes it quite tricky for individual investors, doesn't it? You need a much bigger price move just to break even.
Precisely. It definitely adds a layer of risk. And it wasn't just the bars. The same article mentioned 999 gold rings were up to.
Okay. Similar increases.
Some were even bigger on the buying side, actually, up to 1.5 million VND per luing in some cases. And the spread's there, even wider. We're talking 2.5 to 3 million VND per loom.
So that was the domestic picture in Vietnam that morning. What was happening globally around the same time?
Right. The global price, according to that Lao Dong report, was sitting at $3,318 3 USD an ounce.
Okay. Now, zooming out a bit, what about the whole week leading up to that, say April 21st to 26th? I heard it was pretty wild.
Extremely volatile. Dan Try had an article covering this. SJC gold being over that week jumped by a massive 7 million VND per look.
7 million?
Yeah, it peaked somewhere in the 120, 124 million VND range before settling back a bit to around 119, 121 million.
That's a serious roller coaster. Were the rings doing the same thing?
Pretty much. They almost hit 122 million VND per loan, then dropped back sharply to the 112.5, 115 million range.
Wow.
And get this, Dan Try also mentioned a Che Hang situation for the gold bars in Hanoi and HCMC.
Meaning?
Basically, they were running out of stock, sold out.
Which tells you something about the demand, right?
Definitely. Intense demand. So, okay, prices shot up globally, hitting over $3,400 an ounce, but then they pulled back. What caused that drop? Good question. Articles from both Dan Try and CAFF pointed to a few things coming together. First, we got some U.S. economic data that was, well, stronger than expected.
Okay, and that usually means?
That usually fuels expectations that the Fed might keep interest rates higher for longer. And higher rates tend to boost the dollar and treasury yields, making gold, which doesn't pay interest, look a bit less attractive, relatively speaking.
Right, the opportunity cost. Anything else?
Yeah, there were also some signs that trade tensions might be easing a bit. When geopolitical risk seems lower, the appeal of gold as a safe haven can sometimes diminish.
So it's that classic push and pull between economic fundamentals and market fear or confidence.
Exactly. And another source, Belton Munhai, really emphasized just how dancing their word and volatile that whole week was. Record-breaking swings for both bars and rings.
They mentioned specific records.
Yeah, they noted COMEX June futures hit a record high of $3,442 3 USD per ounce during that period. Really shows the intensity,
Absolutely. Okay, so that covers the recent, quite dramatic price action. Let's shift to what the experts are thinking. Where do they see gold going next, say, in the immediate future?
Well, it's interesting. Lao Dong reported on a Kitco News survey of Wall Street analysts, and the sentiment was actually leaning bearish for the coming week.
Really? After that big run-up?
Yeah. 54% predicted a price decrease, only 46% expected an increase, and nobody thought it would just stay flat.
Huh. That's a bit counterintuitive, maybe. Any specific reasons cited?
Kevin Grady from Phoenix Futures and Options mentioned in Lao Dong and CAFF had an interesting take. He thought that huge $500 jump we saw happened unusually fast, maybe without the usual margin changes you'd expect. He suspected it was driven more by speculation.
Ah, so maybe a bit overdone in the short term.
That seems to be his view, and he flagged $3,000 an ounce as a really critical support level to watch.
Okay, $3,000. What about others? Adrian Day, for instance.
Right, Adrian Day Asset Management. He was also mentioned in those articles.
Yeah.
His view is kind of nuanced. Short term, he's also leaning a bit bearish, or
Mhm.
cautious at least.
Okay.
But he thinks the long-term reasons for gold going up,
Mm-hmm.
geopolitical worries, recession fears, they haven't gone away.
So he expects any correction now to be pretty shallow and probably quite short, like a pause before the bigger trend maybe continues.
Okay, so a temporary dip potentially. Did other surveys confirm this split? CAFF had a Kitco survey too, right?
Yes, and it showed a very similar picture. Experts were split, 46% bullish, 54% bearish, pretty much echoing the other survey. Retail investors, though, seemed a bit more mixed, maybe less decisive.
So definitely no clear consensus for the immediate next steps. Were there any really strong bulls in the mix?
Oh, yeah. Rich Chekin from Asset Strategies International, quoted in CAFF, was looking for a move up in the next week. He even threw out a potential target of $3,500 an ounce.
$3,500, that's quite optimistic given the recent pullback. It is. But then you had others on the opposite side. Bob Haberkorn at RJO Futures, also via CAFF, saw prices potentially dropping to the $3,180–$200 range. He thought buying interest might only really reappear around $3,100. Okay, so a much deeper correction expected there. And Alex Kopsikovic from FX Pro sounded quite cautious too. He warned about downside risk because of all that volatility at the peak. He even mentioned a possible head and shoulders pattern forming on the charts that's usually a bearish technical signal.
Implying a move lower.
Potentially, yeah. He suggested a drop below $3,300 was possible, maybe even retesting that $3,000 support level Kevin Grady mentioned.
Wow, so analysts are really all over the map for the next week or so. Any hints about longer-term views mixed in with these short-term calls?
A little bit. CPM Group in CAFF sort of bridged the gap. They recommended holding long-term positions and maybe buying on dips, but they did have a short-term target of $3,440 for the following week.
Okay, more optimistic there.
But then Jim Wyckoff from Kitco was bearish for the week ahead, citing a weakening price chart and maybe investors feeling a bit less risk-averse generally.
Yeah.
And Darren Newsom from barchart.com suggested gold might be overbought, hinting at a pullback, even if some buyers might step in before April ended.
It really just highlights how tough it is to predict these short-term moves, doesn't it? Okay, let's zoom out again. Forget the next week. What about the longer term? Say the rest of 2025 and beyond.
Right, let's look at those longer forecasts. An article from Light Finance dives into this. They noted the price around April 27th was $3,319.44 and reminded us the all-time high was just hit on April 22nd at nearly $3,500. $3,499.88.
It's the stage. So what's the general feeling for the rest of this year, 2025?
Generally positive, actually. Light Finance compiled analyst views, and the consensus seems to be pointing towards an increase by year-end, maybe to around $3,357.
So holding steady or slightly up from where it is now, are there higher targets?
Oh, yes. Some optimistic forecasts go up to around $3,720. Even the more conservative ones are still generally above $3,000, maybe around $3,077. So the baseline expectation is for prices to remain quite strong.
Okay, that sounds pretty constructive for 2025. Does that continue into 2026?
The positive outlook seems to extend, yes. Light Finance reported expectations for a continued rise, maybe reaching around $3,309 again by December 2026, which is interesting, quite close to the current level. But again, there's a range.
With higher possibilities.
Definitely. Some forecasts stretch up towards $3,600 or even $3,900 for the end of 2026.
And looking even further out, say towards 2030.
The projections get even more bullish, according to Light Finance. Experts are talking about potential prices in the range of roughly $4,900 to $5,200 by 2030.
That's a significant climb over the next 5 years or so. What about really long term, like 2040, 2050? Does anyone dare predict that far out?
Well, it gets much fuzzier, obviously. But the general direction mentioned by Light Finance remains upward. They threw out potential numbers like $8,200, maybe even $10,000 way out in 2040 or 2050. They also briefly mentioned a technical signal breaking a certain target zone, suggesting maybe some more immediate upward momentum too.
Okay, so the long-term bias among analysts seems pretty clearly positive. You mentioned technical analysis there. Did the Light Finance article get into the charts in more detail?
It did. Looking at the weekly time frame, they pointed out a pattern called three white soldiers. Basically 3 strong up weeks in a row.
Yeah.
That's typically seen as a sign of strong bullish momentum.
Okay, positive sign.
But interestingly, they also noted doji patterns appearing near that recent all-time high. A doji looks like a cross on the chart, and it often suggests indecision buyers and sellers are kind of evenly matched. Nobody's really in control.
So strong momentum, but maybe hitting some resistance or uncertainty at the top.
Exactly. A bit of a mixed signal right there at the peak.
Were there other technical indicators they looked at?
Yes. Things like the VWAP and the 20-week moving average were below the price, which is generally supportive. And the money flow index, MFI, was positive, suggesting buying pressure.
Okay, more bullish signals.
However, they also spotted a bearish divergence on the RSI, the relative strength index. That can happen when the price makes a new high, but the momentum indicator doesn't confirm it, suggesting the upward thrust might be weakening.
Ah, okay.
And similarly, the MCD indicator, while still positive, was starting to decline, also hinting that the trend might be losing some strength. So yeah, the technicals are a bit complex, underlying strength, but potential signs of fading momentum near the highs.
It's never simple, is it? Did they translate this technical analysis into actual monthly price predictions?
They did provide projected monthly ranges for XAUSD right through from March 2025 to February 2026. For instance, for June 2025, they projected a range between roughly $2,925 and $3,240. For December 2025, maybe $3,194 to $3,389. And looking out to February 2026, possibly $3,508 up to $3,798. Gives you a sense of the potential path.
That's useful context. And based on all that, what was their sort of actionable trading plan for 2025?
They suggested potential buying opportunities if the price got above $2,965.95, targeting somewhere between $3,220 and maybe even $3,845.
Okay. And on the downside?
If the price broke below $767.08, they saw potential selling opportunities, with targets going down towards $205.88, or in a more extreme scenario, even below $2,000, down to 1966 cents.
Wow, that downside target really underscores the volatility and risk involved here.
It certainly does. You need to be prepared for potentially large swings.
Okay, so we've covered price action, expert opinions, long-term forecasts, technicals. Let's broaden out to the fundamentals, the underlying economic factors.
Right. Balkong Lee and KFF had some good points here. They talked about that classic relationship gold has with the economy. It's seen as a store of value, a hedge against inflation.
And usually moves opposite to interest rates, right?
Generally, yes. High rates make bonds look better. Low rates make gold's lack of yield less of a disadvantage. They also mentioned how a country's gold reserves can even influence its currency strength.
And central banks themselves are huge players in this market.
Absolutely huge. They hold a massive amount of the world's gold. They buy it to diversify their reserves, hedge against currency fluctuations. It's a big part of their strategy.
Can that central bank buying affect things like inflation?
Potentially, yes. If a central bank prints a lot of its own currency to buy gold, that can add to inflationary pressures domestically. And of course, Bao Kong Lee reminded us gold isn't just money, it's used in industry too, electronics mostly, because it conducts electricity so well and doesn't corrode.
Right, it has real-world uses too. So connecting these fundamentals back to the recent volatility, did the sources link them directly?
KFF did. They tied some of the recent jitters to the ongoing U.S.-China trade situation and how that affects investor confidence.
And Kevin Grady had that interesting idea.
Right. Suggesting China might sell U.S. treasuries and buy gold partly as a form of financial pressure on the U.S. Whether that's happening is hard to say, but it's a factor people consider.
And looking ahead, what fundamental events should people be watching?
Lots of U.S. economic data coming up. Lao Dong and KFF listed things like job openings, Joel Teese, consumer confidence, ADP jobs, GDP, home sales, manufacturing PMI, and the big one, non-farm payrolls. All that gives clues about the economy's health and potential Fed moves.
And central banks outside the U.S.?
The Bank of Japan had a policy meeting coming up, which is always watched closely as it can impact global flows. So yeah, lots of potential triggers on the economic front.
Okay, now for something a bit different, that YouTube video you mentioned earlier from Thutsan T, it talked about a potential knee cycle for gold. What was that about?
Yeah, this was a really interesting perspective. They're arguing that what we're seeing now might not just be a normal market correction or rally, but potentially the start of a new supercycle for gold, a much bigger, longer-term trend.
Okay, intriguing. What's their reasoning?
They draw a parallel to the 2005-2011 period. Back then, the big driver was a crisis of confidence in the U.S. dollar, largely due to all the quantitative easing after the financial crisis. People worried the dollar was being devalued.
Makes sense. So what's the crisis of confidence they see now?
It's a combination of things, according to the video. They talk about a U.S.-China currency war, this trend of de-dollarization where countries look for alternatives, definitely the geopolitical tensions in the Middle East and Eastern Europe, and even domestic issues within the U.S.
And central bank buying fits into this?
Big time. They emphasize that the buying by countries like China, 20 months straight, India, Turkey, it's strategic. It's not just speculation. It's a deliberate shift in how nations hold reserves.
So the argument is that gold's role is fundamentally changing. It's not just about inflation anymore.
That's exactly it. The fact that gold has stayed so high, despite the Fed keeping rates up, is seen as a major signal. Normally, high rates would hurt gold. Its resilience suggests maybe it's being revalued as a core part of the global financial power structure.
How do they define the start of such a cycle?
They say it often begins with a shift in thinking. Investors see it less as a trade and more as long-term insurance. Nations shift reserves away from just the dollar. And crucially, prices start rising without huge retail FOMO driving it initially.
Yeah.
It suggests deeper pockets, more strategic buying.
So they're asking, is this the start of something big?
Pretty much, they pose that question. Are we at the beginning? And do you have the conviction to ride it out? They also touch on the idea of market manipulation.
Oh, by whom?
By, major players, geopolitical forces, central banks, big financial institutions. The idea isn't necessarily direct price fixing, but more that these entities can shape the environment to encourage prices to move in directions that benefit their strategic goals.
Like China buying gold while selling treasuries.
Exactly. Or Russia moving towards gold backing. Or the U.S. holding on to its massive reserves to maintain dollar confidence. They argue you need to understand these big strategic games, not just look at trading charts.
How does investor psychology play into this view?
Hugely important. They warn against FOMO, against taking profits too early if you believe in the long-term cycle, against just following the crowd. Strategy, allocation, targets, that's key, not emotional reactions.
Did they look at past cycles to support this?
Yes, they reviewed the 1970 cycle, the 2001-2011 cycle. They talked about the typical phases, accumulation, then the boom, then correction. And they highlighted that the biggest gains often come after gold breaks through previous major highs.
And they see parallels now in 2025.
They position the current situation with inflation, central bank buying, maybe a shift away from bonds, and the dollar as potentially fitting that historical pattern for the start of a new major upleg.
So what's their advice for navigating this, if they're right?
They strongly advise against trying to time the market perfectly. Understand the cycle, have a strategy. Specifically, they gave 5 points. 1, have points where you take partial profits. 2, use clear stop losses for risk management. 3, if you're out, be patient for good entry points, don't chase. 4, recognize markets aren't for casual gambling. 5, the wise investor often sells before the absolute peak because timing the top is nearly impossible.
That sounds like solid, if challenging, advice. Focus on strategy, manage risk, understand the bigger picture.
Absolutely. So wrapping up our deep dive today,
Uh-huh.
we've seen intense recent volatility driven by economics, geopolitics, sentiment, a whole mix.
Expert opinions are split short term, but generally lean positive longer term.
Fundamentals matter, especially central bank actions. And that new cycle idea from 2010 offers a compelling, if speculative, long-term framework to consider.
It really drives home that you need to look deeper than just the daily ticker price, doesn't it?
It really does. And hopefully for you listening, this dive has helped bring some clarity to all these moving parts.
Yeah, we hope this in-depth look was valuable. If you found it helpful, please do give this video a thumbs up, maybe share it with others interested in gold.
And definitely subscribe to the Gold Talk Show channel here on YouTube. That way you won't miss our latest updates and analysis.
Absolutely. So we'll leave you with a final thought, building on that new cycle idea.
Given everything we've discussed, the potential shifts in global finance, the strategic moves by central banks, what role do you see gold playing in your own long-term financial strategy? Something to think about.